Hello and welcome to the Cryptocurrency News channel. If you want to join me on my live stream, check out the link both in the comments and the description. I'm streaming on my backup channel, Good Free Photos channel. So follow me there. And also check out my other channel, Crypto Daily Updates. One great video for all your crypto news for the day. Follow me there as well. So we talked about why institutional investors could blow up the crypto market and really make it go in a bull run last video. This video, we're going to talk about how government can actually suppress the crypto market and why they've done so in the past and they can in the future, and why that actually might be good for crypto and obviously not so great for us investors. So, in a Cointelegraph article, the former head of the CFTC actually admitted that in late 2017, 2018, they conspired with the US Treasury and the head of the SEC at that time to actually suppress the 2017 bull run. Now, how did they do this? Obviously, regulations. So all three of them were aware that crypto was skyrocketing up at that time. They're like, no, we can't let this rock the economy so much right now. We have to suppress it. So they made a bunch of regulations, them and probably other governments of the world, made a lot of regulations at the time to suppress. Now, I don't think they actually collaborated with India and China, because obviously the United States didn't ban cryptocurrency like India and China did back then. So I don't think that was part of the collaboration. But within the United States, which controls something like 40% of like the crypto economy in the world, it is by far, the US is by far the biggest player in terms of dollar money into crypto. So they actually did all these regulations with ICOs, with exchanges, with securities and stuff that really suppressed crypto, and that was not random. That was definitely like all planned out at that time by them. Well, maybe not all planned out, but that was a coordinated effort to use regulations to suppress crypto at that time. So he admitted in an interview that they actually did that. Now, obviously, that would piss a lot of people off because you think that's what caused the crash. It might sort of be what caused the crash, but the crash was going to happen anyways. Anytime something bubbles like that, it will crash back down sooner or later. And the thing is, realistically, there was no use case back in 2017 for almost any crypto. So you were basically just investing in a hot air balloon. It might have gone on a little longer, but eventually it would have crashed down. Look at 2013. I mean, it pumped up for a long time, and then like some event or other, like MT Gox at that time, actually crashed it back down. So eventually, some random event or some whale being like, hey, you know what? I'm going to cash out for billions of dollars. That's going to start the crash. But they did have a part to play in that, and he admitted that they're suppressing that. Now, they're still using regulatory instruments, and they could actually suppress the next bull run. So when it runs up to, past 60K, they might have some stringent requirements that actually push it below 10K again. That is very possible. Maybe push it below 20K. That is very possible. And that's why you actually need to take profits, because you don't really know what mechanizations the government agencies will actually have to actually suppress it back down. My guess is if it runs up to 100K, they'll want to bring it back down to 20K so it doesn't rock the economy too bad. Now, that's obviously really bad for you bull run fanatics out there because you want 100x. And if they actually start suppressing the price, you're not going to get 100x. You will only get about 20x, which, by the way, is still a really great return. And you should actually start thinking about cashing out at around 20x, obviously, to save some of your profits. But they could actually suppress the bull run again. But however, in the long run, they're basically taking this step by step. They're only suppressing certain bull runs. They're not suppressing crypto for the long term. So in the long run, the government agencies, even though they're suppressing these sudden bull runs, they will actually kind of lend itself to crypto slowly appreciating as its use case increases. If there's a lot of use case, then it's no longer a bull run, it's just sustained growth. So the SEC, the CFTC, and the US Treasury are they're not so much against crypto, because there's a lot of people in Congress that are pro crypto now, and I don't think they're going to be very successful being anti crypto all the way. I just don't think that's really going to be an option 5 years in the future or something. But they want slow sustained growth so they can control it and it doesn't rock the economy by just bubbling and then popping all of a sudden at the top. Now, the last bubble pop wasn't too bad. It was only $800 billion, so it didn't really affect the economy. But if you're getting into $10 trillion or $5 trillion and it suddenly pops without control, that's going to devastate a lot of people. Now, it's going to make a lot of people rich, but it will devastate a lot of other people. And they want market mechanisms to actually control that, especially for the sake of their rich investors, because, they're always on the side of the corporate fat cats. Now, we hate that, but that's just really how life works. Can't really do much against it. You can fight against it, but you will probably lose. So you got to read like what the government's doing. If you see the markets going up to like 60K, 70K, and then you hear the government like, oh, we might be thinking about some new regulations, that's when you want to cash out because they will suppress the price. The CFTC, SEC, and US Treasury are much more in line with like a slow, steady growth in terms of crypto rather than a sudden burst of money because they're not about generating bubbles and then popping them. They're about slow, steady growth of the economy, keeping things even. And any presidential administration is going to agree with that because they can keep things even and they can keep slow, steady growth of 4 or 5% per year. That boosts their re-election chances. So that's why you want to take profits when things like suddenly burst because it's not going to burst forever because they know the people in power know that bursts always come with bubbles, whether they actually suppress it or not. If they suppress it, the bubble won't be as big, and that's actually what they want to do. So because they've actually suppressed it before in 2017, they will probably suppress it again in 2020. And you want to basically cash out before that suppression starts because you know it's going to happen. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.